Good morning, ladies and gentlemen. So I strategically started the Zoom 3 minutes late. I've been here for like an hour. And I was like, you know what? I want to start testing everybody. What was rule number one that I asked from you guys that we were going to need? Rule number one, patience. And I'm like, you know what? Let me not start it right now. Let me actually implement patience at this very moment. I want to see how many of them are going to write the support. Hey, why hasn't this gotten started? Patience. Patience. That's the first thing that I asked for you guys. So, good morning to all of you guys all around the world. Good afternoon, depending where you are. And the lesson number one of the 30-day boot camp has already been implemented and put into practice, which is fucking patience. And many of you have already failed. So, for those of you that have failed, I hope you have learned your lesson. And for those of you that applied patience, thank you very much. So with that being said, if you guys can hear me good, put a one in the chat. If not, put a two. Fire. Let's get this fucking started. If you're putting a two, how do you know you have to put a two? Come on, man. Not time to troll. It's day one. It's 7 in the morning. And bro, honestly, I actually like this time. I feel like I'm gonna get so much more done throughout the whole entire day simply because I can be able to be more productive. Let me actually change to this camera right here. Let me see if it even works. It should work. It does work. All right, sick. What's going on? So I had like an allergic reaction yesterday to something. I don't know. Like you guys probably can't really see, but I don't know. Like my eyes are like super poofy. I can barely see, but I'm fine. All right, sick. So before we get started today, I want to do another quick poll. So I want to know how many of you guys are beginners, intermediate, and advanced traders. So let me just do this really quick. What level are you in your trading journey? All right, just go ahead and vote real quick. Just wanna, I know we already did this on the day one of like the welcome one video, but I just want to kind of see this stat again. Okay, this is actually phenomenal. This is what I wanted to see. This is gonna help me understand the pace that I have to go with these lessons. So, bro is casually in a bat cave. Oh, I'm excited. Oh, I am excited. Please go slow. I'm Neil. Don't worry. I am going to go through absolutely everything. We got so much like this is just day one. We got 59 more, 29 more days of like one-on-one like this, but then another 30 days. So, all right. So everybody pretty much voted. So you guys can see here in the poll. So we have 37% is beginners, 54% is intermediate, and 9% is advanced. So once again, for those of you that are beginner, please be patient. Trust me, I am gonna go through everything that you need to understand trading from level 0 to 100. The intermediate, please be patient simply because you might have heard some things that you've already heard and you're gonna rehear in the beginner section, but you're gonna hear it the correct way. And my advanced people, just be patient as a whole. Once we get to the last 2 weeks, and 3 weeks is where things actually start turning up, but we got to build up your fellow colleagues up to that very point. So if you guys agree with me and you guys are ready for that, put a one in the chat. If not, put a two. Sick. All right, cool. So The way I found the most successful way to do these boot camps and be able to make sure that every single one of you guys are paying attention and are writing down notes is by speaking. I need you to be able to hear what I'm saying, you comprehend it, and then you literally get it from a piece of, either a pen and write it down or you type it. But that is the only way that I actually know that you're understanding and you're paying attention. Because I have my slides right here and I'm going to be constantly looking at them to refer to them and stay on track. But what good is it if I just share the slide and you just read it? Nothing. Like the real value is where you hear me say it, you understand it, and when you understand it, you then write it down. Like you're forced to memorize it 2 times. One by hearing it, and then another one when you're writing it down. So that way it gets embedded into your head more versus just you reading something or taking a screenshot or just me sending you something. You're not going to go back and like reread it as if you were to do it on your own. It's a lot more personal once you write your own notes, and it's a lot more personal when you can go back to what you did, not what somebody else did for you. So if I'm teaching you the lesson and then you take away the keynotes that you needed to comprehend to master it and then you write it down, it's a lot better than I just kind of just spoon feed everything. And this way you actually learn, not just understand things. One thing I can start telling you right now, like, all right, guys, in order for you to build a house, you have to first do concrete and then you have to do this. Like there you're just like hearing me, you're just like understanding. Like, yeah, I know what concrete is, I know what what is. But another thing is me telling you, get a piece of concrete and do this and do this, and that way you're actually doing it yourself. So do you guys agree and all that makes sense? Put a 1 in the chat. If not, type 2. Fire. Amazing. Amazing. Okay. Curtis Tom, that's an interesting point. All right, sick. So with that being said, let's begin. So we're going to start off with point number 1. What is Forex? What is Forex? What is the foreign exchange market? Well, the foreign exchange market. No, like seriously, we have to. I'm not asking you guys, right? I'm just like stating a point. Like, okay, what is Forex? And we're gonna go from this point. Just be patient. So again, be patient. We have to like ease into things. It's literally the first 10 minutes of day one. Like, come on. All right. So what is Forex? So I know a lot of people when they get started into trading, they think Forex is you have to actually own some type of currency. And actually, you know what? Something that's going to help me out as well is I turn off the chat very occasionally just so I can just focus on what I'm saying. Nobody can just type anything funny or crazy in the chat. I just speak after I'm done speaking, make sure that everybody understands, and then we move on to the next one. Again, it's good to eliminate all distractions because those of you guys that are inside and maybe want to get it and you guys just want to type, you have to. I'm literally eliminating all distractions. You can't see other people, you can't talk to the people, and at points you can't talk to anybody other than just listen. So this is perfect for just only you can focus. So what is Forex? So Forex, a lot of people at the beginning they understand that you have to own some type of currency in exchange for another one, and you actually have to physically own it or store it somewhere. And truthfully, that is not how it works. The way the foreign exchange market works is the way you trade the foreign exchange market is that you're basically betting the price difference in between one currency or the other. So, very simple example. Let's say that the dollar is at $1 and the pound is at $2, for example. So there's a dollar spread in between there, and it's constantly changing based off of the economy. And it's very small points that is changing, like at 0.5, 0.8. And in that spread, when you use leverage and volatility, is where you're actually able to make money. Now, again, we're going to talk about proper leverage, when to trade proper volatility. All that is going to go later down this week. But I want you guys to understand that when you're trading the currency market, you're not ever owning anything. You're not ever actually trading anything. You're never actually exchanging anything. you're basically just betting that one is going to get stronger than the other, or that one is going to get weaker than the other. You're in the betting game. You're betting that one currency is going to outwin the other versus losing against the other. You're not buying anything, you're not trading anything, you don't own anything. You're just betting. You bet on a sell and you bet on a buy. Now, on that bet, you have how much you're willing to lose, pre-calculated, and then you have how much you want to win, pre-calculated as well. The bets in the currency exchange market are never random. They're only random if you don't know how to properly calculate your your position size, and how to properly calculate your stop loss. It's random if you don't know that. But if you do know that, then it's no longer a risk. It's no longer a gamble. It's no longer a good investment. A good investment to me is something when you understand exactly how much you're going to lose before you make. So, and I think trading is less risky than real estate, because you can buy, for example, let's say the house that I'm in right now for 100,000, and you don't know how much you're going to lose on that house because you're walking into something that is completely blind. You can literally not know if the plumbing is good. You cannot know if the roof needs to get redone. You don't know if the structure of the building is old. There's a lot of random outcomes and how the market's going to react to that you have no idea how much you're going to lose. When you're trading the currency market, you literally pre-calculate how much you're going to lose every single time. So it's not a gamble. It's not like you know exactly what you're getting into. The computer's not going to click the button for you. So there's a big misconception. A lot of beginner people, I'm talking about like very beginner, which is what nearly 40% of the people in here kind of have the perspective of is, I don't want to lose a lot of money when I go trading. Dude, you're not. You're gonna only lose whatever you risk. Like the market or the broker is not gonna go into your account and take your money. Like you are going to pre-calculate your risk every single time. You are 100% responsible for every dollar you lose. Nobody else. Not like real estate that you can buy a property, it gets a bunch of issues, and then you sell it. Somebody comes in, counter offers you less, then you have to pay the broker fees, then you have to pay the realtor fees, the closing costs, all the stuff that goes into real estate, which is just one deal, for example. That in trading, you don't have to do any of that. It's just one trade, and on this one trade, I just want to risk $100. I want to risk $200, whatever you want to risk. That is pre-calculated every single time. So when you're trading currencies, you're just betting that it's going to go up or betting that it's going to go down. There's no difference in between buying the markets or selling the markets. It's not better to buy the market and it's not better to sell the market. There's absolutely no difference. The odds are the same either way, and your success rate is the same either way. I personally, over the last challenge that I just did, I realized that I sold about 80% of the time. And it's not because I'm a better seller than I buy, but it just happens to be that the market was giving me sell opportunities. There's nothing against buy opportunities. It's just, if you notice, the trade that I completed the challenge with was a buy. And every trade prior to that in the challenge was a sell. Not because I wanted to, or I'm only a better seller than buyer. It's just the opportunity the market was giving me. So the opportunities we find in the market are based off of great probability setups, which again, we're going to figure out how to find those later on. But those setups are based off of buying the market or selling the market. That's all you're doing. You're not owning anything. You're not exchanging anything. You're literally just betting that it's going to go up or betting that it's going to go down. And if you ask me, you only have two buttons, buy or sell. It's already a 50-50. You have to figure out how to eliminate all the logical reasons on why it's going to buy versus sell. If you have 6 logical reasons on why it should buy versus sell, you just eliminate the sell button. So you only have one option, which is buying. All you have to do is just find the right spot. It's very easy when you think about it in retrospect. You have literally 2 buttons, and all you have to do is find more reasons to go to one than the other. If you have 6 reasons, so let's say out of 10, so you have 4 reasons to sell and 6 reasons to buy. Well, it makes more sense to buy out of just those 6 reasons. So we just remove the sell option, and all we got to do is find the right spot and the right time to buy. And that's it. Your odd of making money goes up because you have more reasons to buy versus to sell. This is going to get even easier as we go into the technicals because things are just going to make so much more sense. But the first thing is that I wanted to explain is just what is Forex. Trading the currency market is simply when you are betting that something is going to go in one direction or the other, and at no given point are you ever actually owning anything or trading it for something else. If all that makes sense, put a 1 in the chat. Perfect. Lit. Amazing. So again, baby steps, baby steps. We can't see the slides. Yes, the point is you can't see the fucking slides, dude. Is selling not a little bit better because of the spread? No. So there's no difference when it comes to selling. Again, there's no difference when it comes to selling or buying a market. It's literally the exact same. The analogies go crazy. That's what I learned from me. Oh, I got plenty of analogies, guys. Don't worry. Hide your license plate. It's okay, bro. Like, I'm fine. The way you're speaking in simple terms helps. Trust me, it's going to get even easier. Okay. When you buy, are you betting the first currency pair that is getting stronger compared to the second? Great question. I was going to get into that in just a second. So see, like this is I'm going to turn off the chat in just a second. This is exactly what's going to start happening, and I love it. This literally is what I want. The point that I make is so clear that you have a question for the next point, and it's literally the next thing on the site, and that's going to constantly happen. Like I'm going to explain, for example, support and resistance, and you're going to understand it so perfect that you're going to ask about entry, and it's like I'm literally leading up to that every single time. So it's perfect that this is happening right now. Okay, perfect. So okay, so the next point is basically how trading Forex works. So that's where I go into the currency pairs and all of this stuff. So let me actually share my screen right now. Share my screen here. If you guys can see my screen, type 1. If not, type 2. Okay, perfect. All right, just gonna turn off the chat again. All right, thank you guys. All right, so we already know what is Forex. You're basically betting that something is going to go up or betting that something's going to go down. For example, I have this trade that I have lined up right here, which is AUD USD for it to head to the upside. So I'm betting that this trade will go up. Or I can have Euro AUD where I am betting that this market is going to go down. So how does it work? How am I betting a sell on Euro AUD here, but then I'm buying AUD here? So I'm buying the AUD here, but I'm selling the AUD here. How does that work? Well, if you think about it, I'm literally doing the same shit. So the way the market works is with currency pairs. So for example, let's take Euro AUD. This first currency pair is the base. This is what the market is being pushed off of. And then you have the quotes. This is the quotes of the currency markets. Quote. So whenever the market goes up, it usually tends to be because the base pushes it up. Whenever the market tends to go down, it is because the quote pushes it down. Now, this is not entirely true because they're a pair. So if the euro gets very strong, it's going to push this market up. If the AUD gets very strong, it's going to push this market down. Or if the euro gets weaker than the dollar, it doesn't mean that the AUD isn't getting strong. It just means that the euro is getting weak. This market is going to go down. Picture these two as two fighters. So let's say we have Mike Tyson and Muhammad Ali, for example, right? Random big names that I'm sure everybody would know. So whenever Mike Tyson is winning or is stronger than AUD, it's being pushed up. Whenever Muhammad Ali is winning. It is stronger than Mike Tyson. It is pushing the price down. So it's not always that Muhammad Ali is beating Tyson. Tyson just might be tired. And by default, because Tyson is tired, Muhammad Ali is taking the win. So this guy's not doing anything. This just getting weak and it's pushing price to the downside. Vice versa. Tyson is not tired. Muhammad Ali is taking a break. By default, price is being pushed up. Not because the euro is getting strong, but just because this currency pair is getting weak, this price is being pushed up. And this is very important to understand because a lot of people understand, oh, this market, for example, right now, let's say this last candlestick is going up, right? If this is going up, that means that Tyson is winning. Not necessarily does that mean that this currency pair is getting strong. Because if it's going up, that means that the dollar is getting strong. But it could also mean that the AUD is getting weak. By default, it's going up just because this one is stronger than this one. Because this is directly going to reflect on another currency pair, for example, like AUD USD. Now, the reason why I say this is important because you cannot let one market influence the other. You can't let this price action here lead you to think, oh, okay, this is going up. That means that the dollar is strong. I mean, the euro is strong and the AUD is weak. Not necessarily, because if you go over to AUD USD, here you're having a push up on AUD USD, meaning that the AUD at this very moment is stronger than the dollar. Since the AUD is stronger than the dollar, then that means AUD is strong, that this should then be pushing down. But that's not the case, because if this pushes down, that means that the AUD is strong, and it's not. This is that the euro is stronger than the dollar. That's why it's being pushed up. Since you cannot come here and be like, oh, it's up because the AUD is weak. Well, if the AUD was weak, this chart here would then be down. So that's why it's so important to look at each market individually and not take one currency pair to the other. Because I can be selling this market, which means that the AUD is getting weak, and I could be selling this market as well, which then means that the AUD is getting strong. They're literally the same currency pair, but they have a whole other currency pair. You can't always bet on one fighter, like if he's going to always be stronger than the other or weaker than the other, without taking into account who is his opponent. His opponent is going to influence and determine the outcome every single time. You can't just only bet on one guy without looking at the other guy. If everything up to this point makes sense, type 1. If it doesn't, type 2. Okay, perfect. Taking it one step at a time. One step at a time. Perfect. Perfect. And Mike, what the fuck is this guy saying? How do you see if the AD got stronger? Don't worry about it. We'll talk about that right now. What happened if both pairs are strong? Great example. I'm gonna literally get into those right now. I love it. I love it. Okay, perfect. I'm gonna turn off the chat. Perfect. So this right here is a prime example of, let's say, one market getting stronger than the other. But I'm going to show you an example of when both markets are equal fighters. So let's say, oh wow, look, this is a great trade right now. All right, so I'm completely getting sidetracked right now. Like I shouldn't even be here right now. But this right now is a great fucking trade. I'm sorry, guys. Give me a second. I might have to take this shit right now. Double top. Give me a second. All right, we're gonna literally wait 1 minute. If this closes under this neckline, Probably take this. Yeah. Yeah, just sorry guys. I don't love it. Oops. Yeah, I'll probably take it right here. I have to have like a bigger stop. I want my stop loss to be above this. Probably do 40 pips. And my first take profit should be here for a 1 to 2. All right. Let me just see if I take this really quick. Yeah, it's even supposed to be a little bit higher. It's supposed to be up here. And yeah, this 1 second, guys. I'm so sorry. So so let me explain what I'm doing right now, right? So basically, yeah. I just fucking can't even see it. Okay. Yeah, I love it. Okay, yeah. I'm gonna take this real quick. I just figured this in a second. I'm just gonna turn the chat on. I want to see what you guys are gonna say. I'm gonna explain what I'm doing now. G mode on. Give me a second. Sick. Give me 1 second, guys. Oh no, it's leaving. It's leaving. It's not. Just take this John real quick. Holy shit. Spread right now is fucking wild. Going against a trend, am I? Maybe I am. Maybe I'm not. Oh, dude, this is so nice. One, 6, 9. You know what would suck? Our first trade together is a loss. Oh fuck. 2.16. Okay, ready? This is the most beautiful sound ever. You guys ready? 3, 2, 1. Boom. Just like that. Let me see where's my spread, dude. Jesus. My God. I mean, I knew it was. So it goes a trade. Fuck. All right, so we just took the trade. So I have like a little quick account that I'm doing. We're up about, well, no, we're not up. We're down about, what does that say? 1,000? We're down about 1,000. All right, sick. Make sure it's the right account. Yes, bro, I have like 10 accounts, dude. It's so hard. Awesome. All right, sick. All right, we're back. So basically, I'll explain what I'm doing right now in retrospect. Oh, that's right. You guys can't see anything. It's frozen. All right, cool. You guys can see it right now? Yeah, you guys can see it back, right? All right, cool. So basically, let me this right. If you guys can see my screen, type one. If not, type two. All right, sick. So basically, what I'm doing right now is I am selling GBP NZD. So when I sell GBP NZD, I'm betting that the New Zealand dollar is going to get stronger than the Great British Pound. Or, which is the same fucking shit, that the Great British Pound is going to get weaker than the New Zealand dollar. It's literally the same thing. There's no difference. Whether I am betting that the NZD gets stronger than the pound or that the pound gets weaker than the New Zealand dollar. It is literally the same outcome at the end of the day for this currency pair, whatever way you look at it. Now, where it's not the same way is if you are looking for New Zealand to get stronger, but against, let's say, JPY. Like, yeah, it could get stronger against the pound, but it cannot get stronger against the Japanese yen. So, for example, if we're selling GBP NZD and we want this chart to go to the downside, that is because we want the New Zealand dollar to get strong. Now, when we come to NZD JPY, in turn, that means that this should go up because when NZD goes against the JPY, it's in front, so this goes up. But that does not have to be the case because the NZD is not stronger than the JPY. The NZD is stronger than the pound, but that doesn't mean that it's stronger than the JPY. So the movements should not be the same. You have to treat each one individually. If that makes sense, type one. If it doesn't, type two. And I already see some people saying, you're not answering my question. Maybe because your question is not relevant to what we're talking about right now. We're taking it one step at a time. Perfect. So here goes a question. Where does the money come from when you want to trade? Does the broker pay or does it come from a losing trade? The way trading works is an end zero game. So when you make money, somebody else is losing it. Money does not come from thin air. Money does not come from the broker's pocket. Money comes from somebody else. If right now I have a losing position, somebody out there has a winning position, and vice versa. If I have a winning position, somebody has a losing position. That's why there's things like slippage and spread, because sometimes I can have a winning position in P&L, but when it actually comes time to close the trade, nobody is losing that much money at that given time. So the broker has to find that market and those losers to liquidate your position. So always take, okay, exactly. So the point that I want to make when trading a currency pair, which is what we're always going to do, is take into account who your opponent is. Don't only look at the one currency pair that you want to get stronger or weaker. Whatever happens in one does not mean it should happen in another, essentially. So let me just read some of these questions. So Callum, you're asking a very advanced question. Again, so let me just turn off the chat 1 second. So again, for those of you guys that are asking, what about the shift to structure? What about the broker? What about this? What about that? We're not there yet. We're literally in how does Forex work? So please, again, be patient. Bear with me. It helps me go through the more valid questions if you guys are asking questions that aren't relevant to what we're talking about at this very moment and time. It makes it more difficult for me and it drags the classes out longer. So please, for those of you guys that are a little bit in the intermediate section and the advanced section, the questions kind of get mixed up with the beginners that just want to understand what is Forex at this very moment. And then again, we'll escalate and we'll move as time goes. So please, again, be patient. Patience. I'm going to go through every single question. We're here for the next 30 days. Do not rush the process. There's a reasoning behind this taking time. So please just be patient. All right, cool. So any questions up to this point on what is Forex and how a currency pair works. If you have a question, please ask it. If not, just please be patient. How do you know when to buy or sell? Taking all your entries. Jeremy, go fuck yourself, dude. It just fucking says be patient. Oh my God. All right. When do the markets open? So markets open from Sunday to Friday. Every time zone is different. So best way I can do it is, which again, I have this question lined up a little bit more in advance, which I was going to answer it then, but you basically have to use this chart based off of wherever you are in the world. Okay, perfect. So yeah, people don't have any questions regarding what we're talking about right now. Okay, sick. Yeah, again, sessions and all that, we'll get into that later on. Okay, cool. So let me turn off the chat. Sick. So we went over what is Forex. How does it basically work? It works whenever one currency gets stronger than the other. So the way it works is by the price difference in between one currency and the other. So let me bring this to the side here. Search like this right here. I just want to see this real quick. See how we're doing. Okay, sick. Okay, cool. So now we understand what is Forex, how does it basically work. When one currency gets stronger than the other, you're basically going to bet that one's going to get stronger than the other. Next, we're going to talk about what platforms you should use. So I always kind of step a little bit forward with this one and already kind of hop on the TradingView. Already, assuming that everybody's going to use it, but there's really only a couple of platforms you should use. And tomorrow, I'm going to tell you what platforms you should avoid. But the main ones that you should use is one, TradingView. So you go to tradingview.com, and when you go to tradingview.com, you can create an account. You don't have to pay for the subscription. I do it because I like to not get the ads all the time, and I'm able to add more alarms to my chart. TradingView is where you're going to spend 99% of your time looking for the setups or waiting for the setups to come to you. But you don't actually do anything other than just look at the setup on TradingView. So this is the front end view of TradingView. You can go in, create an account, pay for the $10 a month or whatever it is that it costs. And once you get to the TradingView, I don't know anything else about this. I don't know about this community shit they have going on here. I don't know anything about indicators. I don't know anything about their top stories, the stocks, nothing. Like I don't ever go into any of these sections of TradingView. I feel like it's overkill, information overload. None of this shit that's here about ETFs and blah, 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 blah. Then let me know if this trade's going to go down or not. What only thing that's going to let me know if this trade is going to go in my favor is my own analysis and the clarity that I have behind taking this trade. Nothing else. There's nothing TradingView can offer to me aside from real-time price action. The real-time price action is going to be the only thing that is going to be needed for me to do the correct market analysis for me to execute my trade on it. I don't need anything else other than TradingView to show me the price. And once TradingView shows me the price, I can base my decision off of what is happening at that very point in time. Now, once you get onto TradingView, I'm going to literally exit out of this previous tab. I then go to this section here. And once I go to it, you basically click on it and you go to see on super charts and it takes you there again. Right now, I'm just telling you what everything is. Next week, I'm going to show you how everything works. So I'm going to explain to you how you can add every currency pair, how I have it, how you can move it up and down, how you can customize it, how you can implement tools here, which tools shouldn't you use, how to properly use it correctly. The how is going to be next week. This week is going to be what the fuck is everything? What is everything that I need to know in order so I can learn to apply the strategy? Now, once you learn what everything is, next week is going to be how everything that you need to know works. Now that you know how it works, then I'm going to show you how I personally use it. And then once you learn how I use it, then we master it on exactly how I use it. I can't show you how I use it until I don't show you how it works. And before showing you how it works, can show you what it is. So we have to go one step at a time. Be patient. It's going to take time, and it's going to all be worth it for every single one of us. Trust me. First, I have to tell you what is a car, how a car works, and then how the fuck to drift it, how I do it. But I can't just show you how to drift it if you don't know how the mechanism of a car works with the clutch and the transmission, the steering wheel, or what even is a car. Because this is a new vehicle for clearly nearly 50% of you guys. So if you guys are with me so far, put a 1 in the chat. If not, put a 2. Again, it's going to be boring at the beginning, like I've been saying this whole entire time. But on week 2, everything's going to click and you're going to have that aha moment so fast because everything is going to literally perfectly align because we've been strategically setting it up like that. Perfect. All right, sick. So now that we understand what is one of the platforms that we use, another one of the platforms that we use is Forex Factory. So Forex Factory is where we come and we look at the fundamentals. Here's where we're going to understand what is happening on in the world's news events all around the world. What should we be on the lookout for? What shouldn't we be on the lookout for? What is real? What isn't real? What's strong or what's not a strong news event? This is basically the platform to understand what is going on. So for example, today is Monday, November 4th, and we have a news event going on at 10 a.m. about the USD and their factory orders. Now, I don't know what the fuck that does, and I don't really give a shit. The real ones that matter are going to be the red folder. But I'm going to explain to you how to use this again next week. Right now, I just want to show you what the platform is. I want you to just open it up and leave it on your tab of trading, and you leave it there forever. So I have one tab of trading, and that tab, I always leave it, and I don't exit out anything. If you notice, I have Trading View. I usually have Forex Factory, but when we get into the how, I'm going to explain how to use it and why I don't have it open. We're going to get into those details later on. And then I'll have the broker that I'll be using, which I'm going to explain in just a second. And then I will also have the position size calculator by MyFXBook. So when you go to position size calculator, here you're able to calculate how much you want to risk per trade. So here, for example, let's say we have GBP and ZD, and I want to sell it. How much do I want to risk on this pair? I say I want to risk $10,000 for my 50K account. Okay, come here, put GBP and ZD. Once we put our account size, let's say it's 50,000. We put how much we want to risk when it comes to money. Just put $10,000, and our stop loss is, let's say, for example, 56 pips. 56 pips, we calculate it, boom, this is our lot size. That's it. So again, I'm going to explain a little bit more detail how to do this correctly and what is the kind of secret traits behind it, what mistakes to avoid next week. Right now, I just want to tell you what this platform is, have it open on your tab, leave it there, become familiar with it, don't get scared of it. Right now, this is what this platform is. So we have TradingView, which is where we analyze the markets only. Then we have Forex Factory, where it tells us what type of news fundamentals are going on only. It's the only thing that this is good for. Then we have MyFXBook, which is what you're going to risk after you identify a trade and after you look at the fundamentals. And then the last point is basically going to be the broker, where you're going to actually execute the market. So I don't market the broker that I use publicly. I know some of you guys are in the advanced section or even intermediate. I'm sure you've been asking pretty much forever what broker I'm using. So I use lqhmarkets.com. You guys can check them out. If you are in the US and you go and try and open this or even open up the tab, it's not going to let you because they don't take US clients. Says it down here. We are limited and do not provide services to US and my Cuban people. So they don't provide services to the US. Right now, I happen to be in Canada. You know, I don't know how I did that. It's called a VPN. Right? VPN. I'm just gonna do this, right? Because I know this question is gonna come. What is a VPN? A virtual private network. So it basically throws my IP address to wherever the fuck I want in the world. I can be in China right now for all I want. So yeah, you just gotta get a VPN. Costs $5 a month, $3 a month. I don't know. And then you can use a broker. I like it because they have two licenses. They have a license in Comoros and they have a license in St. Lucia. So they are licensed. They're a licensed broker. And most importantly, they have MetaTrader, which is the next platform that we are going to be using. And it's by me. I've tried many other ones and I simply don't like them. MetaTrader is by far the most simple, the most OG and user-friendly platform. I love it. And it goes in tied, like it ties in with the broker that I use because they offer the MetaTrader 5 platform, which is super sick. And I don't have to go and learn how to use all these other platforms. Like for me, the only thing I want to care about is this. I only want to care about stressing about analyzing the market and being able to learn how to properly find a good trade. I don't want to have to bust another mission on how to learn how to use a platform to then execute the same trade that it took me a week to wait for. So I think myself and everybody included knows already how to use MetaTrader. That's why I use LQH Markets because they have MetaTrader and they have two licenses. Every single one of these are the platforms that you are going to be needing. You do not need any other market than this right here. So you have your TradingView to analyze your markets. You have your Forex Factory to be able to analyze the fundamentals, position size calculator, because you don't want to do this on your phone. The broker you're going to deposit the money in, and then the platform you're going to execute the trades that you analyze on the market. It's literally a full circle. And 90% of your time will be spent here, 1% of your time here, 1% of your time here, 5% of your time here, and 3% of your time here. That is literally it when it comes to the trading platforms. Now, how they all work is what's going to happen next week. So if you guys understand what these platforms are and what they're good for, type a 1. If you don't, put a 2 in the chat. Sick. Amazing. All ones in the chat. What's the name of the broker? Ah, dude, get the fuck out of here. What happens when you want to withdraw and don't have KYC? Again, that comes more to the how. How do you do it if you're in Miami and they ask for KYC? I have 3 passports. So like I live here, but I have different passports. Do you have an affiliate link? I don't. I could get one, but I'd rather just tell you where to go and that's it. I don't care to be affiliated right now. Do you place trades on TradingView or MetaTrader? I place my trades on MetaTrader. We do the analysis on TradingView and we execute the trades on TradingView. What if you have a Russian passport? I don't know. Gotta go talk to them. You think LQH is better than Oanda? I think they're different. I don't think one's better than the other. Do I need a VPN on my phone to access the broker on MetaTrader 5? I don't think so. I think you only need the VPN to be able to create an account. And when you go to execute your trades on your phone, I don't think so. Got it. So many questions. Do you use MetaTrader 4 and not MetaTrader 5? Yes, correct. I only use MetaTrader 5. MetaTrader 5, picture this. Picture MetaTrader 5 as the iPhone 16. And picture MetaTrader 4 as the iPhone 13. They're both iPhones at the end of the day, and they have the same function. One is just simply newer than the other. It's a little bit more faster. It's more updated, has a quicker gadgets, but it's the same thing. You're not gonna get an iPhone 16 and not know how to use it. It's the same thing as MetaTrader 4 and MetaTrader 5. Again, how to use those platforms, how all that works is next week. Right now, I just want to tell you what it is, and then we'll figure out. I have to tell you the what of everything first. So I feel like I'm placing my trades wrong. Sucks. I'll help you fix that next week. Cannot help you right now. Right now, we're talking about the what. All right, all right. So a lot of you guys are asking me about other brokers. What do I think of them? I don't think anything of them. I don't know any of them. I only know LQH Market. This is like the only broker that I would recommend right now. There's leverage. We're not there yet. The use of Fibonacci. We're not there yet. Does a VPN method work for? I don't know if it works or not. So a lot of it. So again, this helps me understand that you guys have no question. So again, I asked you guys a question regarding. Do you have any questions regarding what these platforms are good for? There's no questions around that. All the questions that I've gotten is literally around that. I've asked, do you guys understand what each of these platforms are good for? This is to analyze the trades. This is to analyze the fundamentals. This is to pre-calculate your risk. This is to deposit into the broker, and this is to execute the trades. As of right now, I see questions all around those questions that I asked. It leads me to understand that you guys understand what I have educated you on up to this very point. I can't answer things that I have not educated you on yet. That's why you have the question. Once we get there, you won't have the question because I have educated you on it. Up into the point that I haven't educated you on it, you're not going to understand because I haven't educated. Just be patient and let me educate you on it. Just please be patient. So if you guys understand what these platforms are good for, once again, type 1. If not, type 2. Are there other platforms that you ever use? No, there's not really any other platforms that I'll use. I'll use like 1 or 2 other ones, but they're not relevant to right now, and I'll explain later. So TradingView and Forex Factory, yeah, do you use MetaTrader on your PC? No, I use MetaTrader on my phone. Can the broker, yeah, you can execute deposits into a broker. Can you explain how the brokers work? All right, sick. So I feel like none of you guys have any questions regarding what these platforms are for. All right, sick. All right. So now the next point that I want to get into is what platforms should you avoid? So it's not about what platforms you need to use. A lot of you guys know, but what about this? What about this? What about this? What about this? What platforms should you avoid? Basically everything aside from this. So you should not look at any other platforms other than these 5 right here. You don't need a fucking indicator. You don't need this different article of trading community. You don't need nothing other than these 5 tabs that you have here. There is literally nothing else out there that is going to do you any good aside from these different tabs. There's a bunch of other ones like market sentiments, which basically tells you where the majority of the retail traders are. There's a different one where it gives you an indication of what potentially can happen. And like there's just so many different websites, so many different indicators. I saw an indicator once out there that people were telling me to check it out because it had a great success rate or whatever. And it's basically somebody that has an insight like on a broker supposedly, and it sees where the majority of the retail traders are, and you can trade against them. Like, dude, that just doesn't even sound legit. Like, that doesn't even sound legal. So I highly doubt that is profitable. And you can build a strategy off of that because you trading against the masses is definitely not the way. So the platforms that you need to avoid is literally everything aside from these. You don't need anything other than these platforms right here. I don't care if there's an indicator. I don't care if it's a different broker. I don't care if it's a this. I guess the only other platform you would need is a VPN. So whatever VPN you want to use. I personally use Nord. This is the VPN that I use. I think they're one of the biggest ones, but I also use ZenMate. ZenMate is another one that I use. Yeah, ZenMate is another VPN that I use. So I don't know. I personally would recommend for you to do your own due diligence on whatever VPN you want to use. Bro, they're all the same shit at the end of the day. It's like, let me explain VPN. VPN is like where you buy your water from. No, at the end of the day, you got some bougier water and some less bougie water, but it hydrates you. It's the same shit. There's some bougie VPNs, there's other bougie it's at the end of the day, they're gonna put you in a different IP address. It's the same shit. There's no difference. So I use NordVPN. This is the VPN that I use. So look, let me actually show you guys how it works right now. Let me show you. So South Africa. I mean Argentina. I always get confused with this shit. So I just click on it. It's finding the best server. Usually I'm connecting to it. There you go. Boom. So now I'm connected to Argentina. Say I want to go to Cape Town. Boom. I connect to it. And in 30 seconds, I'm in South Africa. So it basically just puts my eye. So you see, boom. Now I'm connected to South Africa. It's very user friendly. They all look identical. To me, it's all the same shit. I like to be in Canada because I think that it always works the fastest for me for whatever reason. So this is how the VPN works. Again, I got a little ahead of myself with that step. This is the week where I'm supposed to teach you what everything is. Next week, I'll teach you how it works. So at this point, do you guys have any questions with what platforms to avoid? If you have a question, please ask it. If you don't, just sit tight. Hang tight. Do you analyze on the laptop and execute from the phone? Yes. Was I lagging for a minute? Yes. Okay, but you guys hear me. You guys understood though, right? Like I don't have to repeat myself. Okay, good. So yeah, I probably lagged because I was switching out of like I was switching in and out of locations with the VPN. That's probably why I lagged. So since I was switching from Canada to Argentina or whatever, that's probably why I was lagging. All right, cool. Let me share back my screen. All right, cool. So up to this point right now, we have discussed what are the platforms you should avoid. Where the fuck? Oh. So again, I'm just gonna save you guys a lot of time. Like a lot of you guys that are asking questions and they're not relevant to what I'm talking about right now, I'm just gonna completely ignore them. I see a lot of you guys saying, "Bro, you're not asking my question. You're not answering my question because you're asking me how do I handle a losing streak." That has nothing to do with what the fuck we're talking about right now. So please be patient. We'll get to your point. All right. Next is what is a chart? Let me just turn off the chat. So no other platforms. So somebody, Diego, you asked no other platforms to avoid. You basically avoid everything that's not this. So it's kind of a trick question, which is what platforms should you use only? And these are the only platforms you should use. And the trick question is what platform you should avoid is everything outside from these platforms. So it's a trick question though. The whole point is you avoid everything other than these platforms. Cool. Next is going to be what is a chart? So what the fuck are these lines and these boxes, these ticks? What the hell is this that we're looking at go up and down? What is it? Well, I don't really know, honestly. I don't. I got no damn idea. Imagine. I'm kidding. Obviously, I have an idea of what this is. It's funny because I'm hearing myself cracking these like dad jokes, and maybe I think they're funny. Maybe they're not funny. Maybe some, maybe like two or three of you laughing, and other of you guys are just looking at the screen like, why am I here? You know? No, I'm kidding. All right. So, what is the charts? So, the charts is the most direct. It's one of the most direct representations of what the currency pairs going against each other are doing. So let me put this into perspective. We're going to continue going with the Tyson and the Muhammad Ali example. So let me search up here, fighting stats. So this right here, for example, is a direct representation of these two fighters, for example. right? So we have Francis and we have Sir. Fuck. I picked the hardest name I could have fucking read in the life. Francis and Kane. I'm so sorry. Dude, I won't fuck with you, but I'm saying your name wrong. All right. So these are the stats and the direct representation of each one of these fighters. So if I were to come into here and we blur out this homie right here, we just completely not look at him, right? We don't see who it is. We just look at the stats. This is what we see. Same thing if we do it with this guy right here. We completely blur them out and we don't look at them and we only focus on the stats. This is what we get. So when you're looking at the currency market and the charts in specific, you're never looking at the actual dollar. You know, like, do any of you guys know? Well, this is kind of a is a very tricky question because there's people from all around the world here, but people from the US, do you know what the Japanese yen looks like? Do you know what a New Zealand dollar looks like? No. Somebody that's in New Zealand, do you know what the pound dollar looks like? No, you don't really know how the actual physical dollar looks like. You have an idea, or maybe you do know, but you don't know all of them. You have an idea, but you don't like really know. You don't really give a shit. You care about the price. What is it valued at that very moment, and how can I make money on it? But that's exactly what we're doing when we trade. We don't ever look at the actual fighter. We don't look at the currency pair. We only look at the stats. The stats are what make us make a decision on our bet. So right here with this UFC fight preview, we're looking at the stats and we're going to make a bet. Either this guy's going to win or this guy's going to lose. If you notice, I just said the same fucking shit. If this guy loses, this guy wins. If this guy wins, this guy loses. They changed nothing different. So this is where I would sell the market and then I would not trade this market. So I'm selling here or I'm buying here. So we're looking at the stats. And when you're looking at the stats, this is your chart. You make a decision off of the stats. This guy's strikes, this guy's stacking defense, the takedown, the whatever. So if we look at the stats right here, this guy has 2.04, 2.7. So he takes a win on this one, 2.5, 5.3. Takes a win here, 0.4, 0.5. Takes a win here, 0.4, 0.6, 0.4, 0.2. So he takes a win here, 0.2, 0.1. He takes a win here, 0.2, 0.7. Win here, 0.8. And we have a 1. So by just looking at this simple stats, it makes more sense to bet on our boy Gane than fucking Francis. Francis, respectfully, you got 2 points in your favor. Our boy over here has 1, 2, 3, 4, 5, 6. So if we are going to make a logical decision based off of stats, we would make it on Gane because he has more stats in his favor. And the representation of these stats is then going to be the person behind it. But we don't look at the dollar first. We look at the stats, and then the stats is what then gives us the representation of the person. It's the same thing here. We don't actually look at numbers like that. Our representation of these numbers or of these stats are these candlesticks. Now, these things could be read in many different ways. We can have, let me just show you right now, for example, on Forex.com. We can have this show it instead of a candlestick. It could be on a line chart, for example. Let me just hide this. It could be on a line chart, for example, or it can be in a whatever the hell this is, or it could be on a high to low, or it could be on a this. I don't know how any of these shits work, honestly. I promise. I literally don't have any idea. Are you gonna have this stepping, whatever the fuck? I only know it on the candlesticks. It is the only thing on how I know how to read the stats. So you can read the stats many different ways. You can look at the stats like this. You can look at the stats based off of their record. You can look at their stats based off of whatever parameter this is. You can use a fucking pie chart Like there's so many different ways you can look at the stats of a fighter to determine your bets on who you want to win and who you want to lose. Now, in trading is the same thing, but the most common way to see success is by the candlesticks. So these candlesticks are representing the fight in between one currency pair and the other. At a certain given time, one currency pair is beating the other, and at another given time, the other is beating the other. The chart is giving you the direct representation of the fight. Where is the fight right now and who is winning? And based off of who is winning, you make a bet on that. If right now the NZD is winning, you just continue betting on the winner. If the pound is winning, you continue betting on the winner. You don't ever want to trade against the winner. So if these two motherfuckers are fighting right now, by the way, any of these Russian guys, I'm always betting on. I don't look at the stats, right? These guys right here, if they have Nagamenov, any guy that looks like this, I'm betting on him. I don't give a shit. I'm not looking at the stats. I'm not doing any market analysis. I'm betting on these guys all day. That's the winning trade right there every single time. So it's kind of the same thing here. I'm kidding. I don't know. I don't know if that even makes any sense. But the point is that the way when you go to analyze the market is there's many ways of looking at the stats. When you're looking at the stats, is what's going to determine the chart. If that makes sense, type one. If it doesn't, type two. I want to make sure that makes sense because I want you guys to understand what is the chart. The chart is the direct representation of the fight. Who is winning the fight? Did I understand the analogy? Okay, I'll explain the analogy one more time. Don't even worry about it. So I'll explain it right now. Perfect. I'll just turn off the check. Let me just explain it one more time. So when it comes to the fight, it's not like the actual fighters, which they have a certain amount of time and there's a winner at the end of the day. There's never a winner in the currency market. They're always fighting and they're going to fight forever. There's always going to be a Great British Pound and there's always going to be a New Zealand dollar. I personally believe in, at least in our lifetime, there will never be a point where those currency pairs are not going to exist. So the fight will continue forever. And meanwhile, that fight is going on, you can actively bet on who is winning at that very moment. Who's going to win for the next 2-3 days? Who's going to win for the next week? It's not like an actual fighter that there's a timeline and at the end of the game or at the end of the fight, there's a winner. There's no winner at the end of trading. It's just who's winning at that very moment and who you can continue to win with. There's really no difference in fighting. The only difference is that in fighting, there's a cutoff time and there's one winner. And in trading, there is no cutoff time and there's constantly opportunities to bet on the fighter. So again, let's say right now it's Conor versus McGregor. To start off, Conor starts strong, so you bet on Conor and you say, I think Conor is going to stay winning ahead for the next 2 days. So you basically buy this market because let's say that GBP is Conor, and let's actually make it simpler so it's more of a visual direct connection. Let me see if I can do this. I'm sure I can. Boom, there you go. Perfect. Perfect example. So we'll come into here, right? So we have GBP, NZD. All right, perfect. So this is GBP and this is NZD. When the fight starts, we have Khabib that he starts off strong. So since Khabib starts off strong, your bet is, I think Khabib is going to stay winning for the next 2 to 3 days based off of this. He's been training in the fucking mountains. He's been doing whatever. And I want to place my bet up to Wednesday, or not even up to Wednesday. I want it because it's really not based off of time because trades can take 1 day or they can take 1 minute. So let me actually rephrase that as a bit of an advanced statement, and we'll get into that later on during the 30-day bootcamp. But I want to bet on Khabib until he has 100 punches on Conor, because I believe he's going to get 100 punches on Conor before Khabib before Conor gets it on him. That's my bet. So you bet on that, and whatever happens, happens. You win or Conor gets the punches on him first. But you're betting that this guy is gonna start winning, so this goes up. Whatever the outcome is when it's done, then you want to change your bet or add another bet for this market to then go down. When now your Conor is going to start winning Khabib. Conor's going to take him down. He's going to kick him. He's going to do whatever the fuck. And I want 10 kicks from Conor to win my bet, for example. Well, that's where this price starts going down. When this market starts going down, that means that Conor is winning. That doesn't mean that Khabib is winning. When Khabib is winning, this market goes up, and that means that this guy is losing. When this price is going down, that means that this guy is winning and that this guy is losing. Now, just take that same representation, but up here. Whenever this market goes down, New Zealand is getting stronger than the pound. Whenever this market is going up, that means that the pound is getting stronger than New Zealand. Now, the way of us seeing that happen, instead of seeing blood on a cage or these guys all cut up all over the place, what we see is this, the history of the fight. So this is the fight. So at this point, Khabib was winning. Then Conor started picking back up. Then Khabib got a strike. Then Conor got a takedown, blah, 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 so on and so forth. So the fight never ends. It goes on forever. And the way you see the fight happen instead of a cage fight, you see the fight happen in this chart. So what you're looking at every single day is the fight in between one currency pair and the other, and who is getting stronger and how you find an edge on it. If that makes sense, type 1. If it doesn't, type 2. Fucking analogies, I'm cooking, man. It's fucking day 1. I'm cooking. All right. It's getting hot in here. All right. Great analogy, great one. And it's just day 1, boys. It's just fucking day 1. Perfect. So what we're looking at right now is just the now. I personally believe that Conor is gonna win this fight for the next 20 punches, for example. So right now, I basically bet that Conor McGregor is gonna get a takedown on Khabib. Now, is that gonna happen? Well, right now they're both kind of just dancing around. So if you notice from the moment that I executed the trade about an hour ago, they're both literally like just fucking looking at each other like fucking wasting our time, you know? So when a fight gets boring, what do? Boo! No, you just walk away. You know, you just get out of there. It's the same thing here. When the market's gonna start moving slow, you don't just look at it be boring. You gotta just get out of it. You go do something else. So for right now, this is the perfect example of me wanting for Conor to temporarily get stronger than Khabib. If everything makes sense, put a 1. If it doesn't, put a 2. Sick. I'm glad the analogy makes sense. So that is what a chart is. When you're looking at a chart, you're looking at the basic representation of the fight. It's the history of the fight. Sick. So we already understand what is a chart and then how it works. We're going to get into that next week. And you guys already understand what is a currency pair. Currency pair is one pair versus the other. And whenever one is winning, it drives price down that side. Next is, and I love this one. I don't know why, but what is a pip? Type 1 if you know what a pip is. Type 2 if you don't know what a pip is. Oh, shit. I want you guys to see this, actually. This is actually very good that I just said that because I want you guys to see that. Let me just. Please go ahead and fill out this poll. Oh, shit. Being a little slow. Please fill out this poll. Do you know what a pip is? This is a crazy stat. I'm very glad this is like this. I'm going to explain to you what a pip is. And then next week, I'm going to explain to you how it works. But it's going to be very exciting when I explain to you how I read a pip. Okay? It's very different how I read a pip compared to somebody else. All right, so these are the stats. 37% don't understand what a pip is. So be patient to the 63% that do. Again, be patient. So what is a pip? I'm going to bring this here. So I'm just going to do the textbook one first. Let's take this. What is a pip? So a pip, technically speaking, is a unit of measurement used in forex trading to represent the smallest price change in the exchange rate. So a pip is a way, in simple terms, right? You don't have to get lost in all that professionalism bullshit that doesn't make any sense at the end of the day. When it comes to this, it's a way of measuring when price goes up or down. It's when you measure how many points are you going up, how many points are you going down. So for example, right now, I am 19 points in the red, and I have a 56 points as my stop loss, and I have 111 points as my take profit. A pip is known as point in percentage. Point in percentage, which at the end of the day is a different form of measuring where the market is going. Is it going 10 pips at this candlestick, or is it going at 3 pips? Is this candlestick moving at 10 points or at 3 points? Pip, point, measurement, it is all the same shit at the end of the day. It's a percentage that is being weighed, that the market is being measured. For example, this candlestick right here, if we measure it from the top of it to the bottom of this candlestick as a whole is 71 pips, 73 points, 73 points in percentage measurement, whatever the case is. A pip is how you measure how much the market has moved up or how much the market has moved down. It's a way that you measure the movement of the market. Pip is points in percentage or measurement. Pip to me equals points measuring the markets. That's it. There's literally no other meaning to pip to me. I don't ever look at pips any different way. Does gold have a different pip than every currency? Yes, but again, that's a bit of an advanced question. We just got over the hurdle of what is a pip. So we'll get to that when we get to that. Are all currency pairs measured by the same pip? Every single currency pair is measured by pips, which is points. But sometimes the points on some currency pairs are more than others. Now, what do I mean by that? I think I have a funny one, right? All right, so I think I have the analogy. So humans are measured, let's say, by inches, right? So I don't know, right? I'm 6'2", right? Let me just do this real quick. Inches to feet. Don't laugh at me, motherfuckers, right? So I'm 6'2". So that means that I am 74 inches, right? If I have 74 inches and you shave off 4 inches off of me, I'm 5'8". It's actually a really big difference, right? Because that's actually how tall I am. I'm actually 5'8". So let me actually do something a bit. Right? So let's say I'm 74 inches and you shave off 2 points off of me, 2 inches off of me. I'm still 6 foot, you know? I'm still the guy. But when it comes to, let's say, shaving off 2 inches from somebody that is 5'5". If you shave off 2 inches from a short king, this guy's 5'1" right now. That guy just went from being somewhat, passable to being a total midget, respectfully. So 2 inches might mean a lot to a short guy, but it doesn't mean shit to somebody big like me. You get what I'm saying? So pips on the currency pair. So on, let's say, for example, GBP NZD, 2 pips is really not that much. Like this right here, this little movement right here is 4 pips. Look at how small that movement is. But let's say we come somewhere to AUD USD. The same 5 pips is a lot bigger of a move. You see how much bigger this box is on AUD USD compared. So let's actually like draw out a box. So it's from here to here. No, not this one. Let me do something like this. So this box right here is the direct representation of 5 pips on AUD USD. Now I'm going to show you the difference between 5 pips on AUD USD, which is one currency pair, to 5 pips on. Let me just do it up here. Shit. To 5 pips on GBP NZD. So this is 5 pips. This can't be right, but whatever, just for examples purposes. This is 5 pips on GBP USD. So 5 pips on AUD, 5 pips on GBP NZD. So the difference of 5 pips on one market and the other is significantly the same. I mean, it is significantly a big difference between one market and the other. But at the end of the day, it's the same measurement. It's just how much does it mean to one pair versus the other. It has the same value. 1 pip is 1 pip. An inch is an inch wherever you put it. But it means more to somebody that's short than to somebody that's tall. That makes sense, type 1. If it doesn't, type 2. Yo, these analogies, bro. Dude, I should write a fucking book, dude. W analogy. Oh no, dude, it's only day one. We getting started. Trust me, bro, that made a lot of sense. You cooking. I mean, bro, yeah, it's just simple, you know? I mean, I don't know. Like, boys, add an inch to it. But that makes a fucking difference, you know? So an inch is an inch, you know? Jesus. I was gonna say some crazy shit, but I can't, bro. I don't know. I don't know the male to female ratio in here. I don't know, and I want to keep it to trading right now, you know? I can't say. All right, sick. So we understand what a pip is and the fact that the pip is a point in percentage. It's the way you measure the market, and the way you measure it is the same for every single currency pair. The way that it is valued per currency pair, it is very different depending on how much that market it means to. If all that makes sense, type 1. If it doesn't, type 2. Sick. All right, I don't know. I think there's like one guy typing 2. Harun. What the fuck is his name? Oh, dude, I can't even read his name. This guy's spamming 2 like an animal. Harun, what's your question, dude? Or are you just fucking trolling? No, that's what I thought. Troller. What EMA am I using? Kevin? Kevin? We're not there right now, buddy. Kevin, we're not there yet, man. Be patient. Why are some markets bigger than the others, or why are they more volatile than the others? Great question. It's just simply because of so for example, where do you think there is more money flowing? Is there more money to Great British Pound or into the Australian dollar? There's more money in the Great British Pound. So there's just a lot more volatility in there. There's a lot more exchanges going on. There's more economy in with the Great British Pound, right? So there's a lot more volatility, meaning that the point in percentage, the measurement, means less because there's so much abundance of it. There's so much abundance of money. It's like right now, again, I'm 6'2". I'm so tall and I'm so, high, right? That inches don't really mean anything to me. What means shit to me is feet. Talk to me in feet. Don't talk to me in inches. But if you go to AUD USD, for example, that there's not as much volatility is why the inches or the measurements are a bit smart because there's not as much movement. So usually, I mean, obviously, again, that's just a very brief explanation when it comes to that because there's also a pair to it. Like you have to understand there's another currency market to it. So both of the currency markets to it, if they're two big currencies, then it'll make the value of the pip be worth even not the value of it, the measurement of it be seen even less because there's two big volatility markets. It's a great question, just so you understand it, but doesn't influence on your trade at all. So Ruth Roa, you're asking me a question that I don't have the answer to, brother. Again, you guys don't spam the chat, man. Like it does not help your case. How does this impact your gain and loss? Like, how does the inches impact my win rate playing basketball? Doesn't impact it at all. It's just how you measure me to see if you want to draft me to go play basketball. Pips does not matter when you win and lose a trade. It's just you understand how much the pip is so you can calculate your risk. It doesn't literally matter at all. So Ruth Roa, brother, you're asking me a question that has nothing to do with what we're talking about right now. And what's driving me crazy is you're spamming. Am I saying your name wrong? How the fuck? How the fuck do I pronounce this? How do I say this shit right here? Fuck rectangle, whatever. All right, second. So we all understand what is a pip. Now, let me see something real quick. Give me a second. Un segundo. All right, sick. So for today, ladies and gentlemen, that is pretty much it. So today we went over what is so today we went over is what is Forex like and how it really works, what platforms to use and what platforms to avoid. We went over what is a chart, what is a currency pair, how a currency pair kind of works, and what is a pip. So all this very, very, very beginner stuff, things that are very brief and over the top. We're going to basically recap it is we understand what the currency market consists of. We're betting that it goes up and betting that it's going to go down. We are only analyzing the markets on TradingView. We're looking at our news on Forex Factory. We're risking or calculating how much we want to risk on Position Size Calculator, my FX book. We're depositing the money into LQH markets and we're trading on MetaTrader. So we understand that the charts is a direct representation of one currency pair fighting with the other. This is the history that the fight leaves compared to blood and sweat on a cage and scars on a face. This is the way that this market leaves its history of the fight. And the way we read the stats to determine if we want to bet on this fighter or not is going to solely be on the price action that we are seeing, which are these candlesticks, which is a direct representation of looking at the stats of a fighter, for example. So, ladies and gentlemen, and a bunch of other fucking analogies. So, if everything for day one made sense, put a 1 in the chat. If not, put a 2 in the chat. Sick. So I know a lot of you guys may have questions, but like I will continue to say every single day into about day 20, your questions will get answered in the following classes. The questions, you don't have any questions regarding right now. You probably do or don't simply because they was explained very simple and you get it and you're ready to learn the next point. And when we get to the next point and I teach it, you're going to have a question about the next point. And when I get there and I teach it, you're going to have a question about the next point. And I'm not going to answer that question until we don't get into the next point and then I teach it. Once I teach it, you probably won't have that question anymore. You're going to have the question about something else. And when I'm there, we'll teach it. It's the same thing. It's going to happen over and over and over again. So it's very simple. Day one, I say it's a good start. So you guys kind of get the feel for how everything is going to kind of flow from here on. This really was just more of us kind of connecting, getting to know how we're going to go on for the next 30 days. And truthfully, I am excited for tomorrow. Tomorrow is going to be an interesting one. I would explain the topics, but I'd rather wait until we get to that point so we can actually discuss it in a little bit better. So if you guys like the class, put a W in the chat. If you didn't, we actually stopped the recording. So again, remember, tomorrow we have the class at 4 p.m. EST. So pretty much almost every single one of you guys showed up today from what I see here. I know some people couldn't show up because they are, the time zone issue. So tomorrow we have a 4 p.m. EST class. So keep that in mind. And then Wednesday back again at 7 a.m. So appreciate you guys, being here early in the morning. Tomorrow's class should be a little bit longer or kind of same time, more or less. And I'm going to again go into a little bit more detail on what other things are and save the energy for how things work next week. So I appreciate you guys for being part of today's class. Make sure to watch these recordings. These recordings are going to be so key to your guys' success simply because you're going to only understand it when you watch it, you write it down, and then you keep on refreshing your own personal notes. The analogies help out a lot because it gives you a direct understanding with something that is real and that you probably have seen or used in real life, and you're able to connect it directly to the charts, which is the best thing that you can possibly do because you're learning a new language right now and you have to have as many similarities to this language as you possibly can. It's a lot easier for you to grasp and understand as soon as you can do it. So the recording will be uploaded as soon as it can. I would love to record it right now live. It's not how it works. It has to download from Zoom, and then from Zoom, it has to upload to your portal in Academy. But what I will guarantee you is that it will be uploaded as soon as I possibly can. I send the link to my team, and my team is just there kind of twiddling their thumbs, waiting for it to get uploaded. Once it's done, they have to wait for it to then get uploaded on your guys' portal. So again, rule number one, be patient. It's going to get uploaded by today, and you guys will see me tomorrow at 4 p.m. EST, and you guys will get access to the link as well in your email, as you guys have been doing every single day. Be patient. We're here for the next 29 days. There's no need to rush or get FOMO. So appreciate you guys being part of today's class. I will see you guys tomorrow, 4 p.m. EST, and set and motherfucking forget.